All right, so it's just a quick review on the market. All right, so I will start right there. So what we see here is the market pulls back, and just make sure I'm at the right place. Over here, you have volume at the bottom, then you had a change of behavior. So as you know, VOB validates the COB, and the COB validates the VOB. And the higher high validates everything. So all of that together, basically your trend was created right here. So as your trend was created, we had one reaction off of this level, obviously, because that's the break and test and all of that. So it then retests on less volume, and you start noticing something. So what are some of the price volume behaviors? Well, after the volume off the bottom, you see green, green, green. As volume, increasing volume, increasing volume. And then buying. But over here, there really isn't that much pressure. Then it pulls back, not a lot of pressure. And then here, pressure picks up right there. Right there. And then what do you have? You have that rally to the top, which did what? Test the breakdown. By the way, this is the Dow Mini. All right. After that, you had this selling that came off the test of resistance. So where do you see the selling coming from? The red waves down. And why I say this is because this is exactly where it always comes from. It comes from those break and test here, right there. And the second place where it's going to come from is the top, right there. If you check your charts, it's always the same thing. Where is the selling coming from? It's either coming from the area of the breakdown, or it's coming from the origin of the rally. Only comes from two places: origin of the rally and the where it becomes support, become resistance, resistance becomes support, that kind of thing. And that's where you see the pressure come. And then lo and behold, what happens again? As it goes down, it tests the high, the origin, and what happens? Pressure comes down again. And then it retests. What happens? Pressure comes down again. Price goes down because pressure increases, selling pressure. So, I mean, these are the key levels, always the same thing. Like, it's just a breakdown, test the breakdown or breakout, and test the origin. That's it. Those are the two spots. Why? Because here, supply overcame demand, and at the origin, supply overcame demand, creating the turning point. And here, supply overcame demand, breaking the level, this level. So the creating the turning point is where supply overwhelmed demand, and here, as the low was taken out, the break of the level is where supply overcame demand. Both areas are where supply showed its hand, it showed its force, it showed its strength. So that's where the shorts are, or that's at least where they were when they did what they did, and then we have to see if they're still there. All right, and here, obviously, supply, there's the origin, what happens? Tag it, and what happens? You have some move, right? It's the same thing over and over again, right? Why? Because that's where you had a turn where supply overwhelmed demand and had followed through pressure, being downside pressure. So if I showed you this chart and you don't know shit, when I asked you from here to here, where's the most amount of red? You'd say right here and here. So when you test that most amount of red, you get more red. Here again, it's testing that red and you get more red. So eventually what happens is it gets taken out. And then you have supply come back down. And where's the most amount of black or green? It's right here. So now test the origin of that. And you have a reaction taking it to the top. And I mean, this thing just repeats over and over again. So eventually comes down here. Okay, so let's just take a look at some trades. So first thing to note is you have cycles. You have up and down, all right? And it's a little choppy, but it's just up and then down. If you draw a trend line, you can see a clear break. You actually don't even need a trend line. You see a clear break. And then when it breaks, what you want to do is take a look and see where the pressure is. See green, 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 because, if they're still there, that's where the buying will occur, right? Because buying, test, or mitigation, and rally. This one in here is a little bit, not a little bit, but a little more interesting because you can see there's very heavy pressure here, relatively speaking. There's a lot of pressure here, but the market, when it goes down, it has one brick and it reverses back up. So it's very important to note that particular behavior. Why is it important to note that high volume behavior? Is because when it goes in the opposite direction, it means either that's accumulation or someone took sells and they're underwater. And what happens? Pulls back the test, giving these guys the opportunity to get out of their positions. This is selling pressure. It doesn't go any lower and instead it reverses. When it reverses, what happens? These guys are underwater if they're sold. Whoever took the other side of the buys, sold, right? So now they have an opportunity to get out. How? When price goes back to that level, they can get out. And typically that's when they're getting out and new longs are getting in, it creates pressure, which creates the rally. It's like, yeah, there's buying, but there's also covering, all right? Exiting existing losing positions. So here you have losses. Now, what makes this particular rally interesting for me is as the price goes down, you have volume right at the turning point, you have follow through, and you have a breakout against this high. So you have volume at the bottom, not volume at the bottom like the typical thing I show, but you have volume at the turning point, meaning the pivot. Then you have follow through volume that breaks the high. And then you have some more follow through that, hits the resistance. There's some selling there and it goes back down. It didn't go all the way down. I thought it was going to go a little bit lower, but whatever. In any case, it does all this. And you have some heavy volume right here. Why? Because it's breaking through. It's breaking a level. This level and probably encountering that level over there. And it gets absorbed and they break through and take it higher. Now this, when the market's, all right, right here is the selling pressure, right there, 15. So 1,500 contracts right there. That's a lot of pressure, right? Not a lot, but enough to stop the move up. There's a little up thrust, some more pressure goes down. Here it gets interesting because here against that 33, you figure there would be a bounce. And there is a bounce, but there's no pressure, like in terms of volume pressure. So, I mean, someone attempted by about 500 contracts, but it didn't work. There was a little bounce here against this breakout brick, but it didn't work, meaning it just bounced one brick and then fell back below. When it went below, from the low, what do you know? There's where buying going to come in. Buying going to come in two places. One is when the area of the breakout or breakdown, and the other is the origin. And you see from here, the origin volume comes, and very, very heavy volume. If I saw this, I'd be very skeptical of the shorts and say, they're in trouble. But it turns out that it had no follow through. Why didn't it have follow through? Well, for whatever reason, it didn't. And what happens after that, it just continues to go lower. So these guys are underwater. And they're lucky because price goes back into that area, giving them the opportunity to exit their position because there's a lot of volume. Look at all this green. So, I mean, someone's underwater, right? The price goes up there, they exit the position, price goes down. Here, I have no idea what's going on yet. What I do know is there's selling pressure here, but that might be just buys taking the other side as it comes to the origin. Up, down, here, something, something. I don't like the way this looks. Why? Because against this high, price tried to break, but instead it got rejected. See that? Against this high, it's trying to break out, but the break only has 100 contracts. And right after it, you have a bar or break that has 600 contracts on the downside, which is having follow through. In my opinion, that's not a good sign. I could be wrong, and this could reverse and go right back up. But the way I view it, you have resistance here, tied to break here on this level. So there's resistance, and there's just selling pressure off of it. So I would not consider it bullish. Even though you have this rally back here, it just does. Oh, maybe this brick will come in with the volume now, right? Right here, you have some green. So this is 6 down. This might go up because of that 600 contracts. You don't know, but as far as I'm concerned, right now, as it stands, it's not good because they tried to take this area out and instead found selling pressure. So until the buying pressure comes in and it has fall through, I would say it's probably going to go lower until I see enough pressure here on a green brick with fall through. However, from a bullish perspective, this background is bullish. So maybe preliminary demand, and also has not taken out the high. So maybe go a little bit lower. Anyway, let's see, there's nothing here. Except for these two bricks. These two bricks are the ones that are holding the rally so far. These two bricks, the 4 and the 3, they're the ones that are holding price. All right. Thank you all. Have a good night. Bye.